Hello there. What's going on, traders around the world? This is Mohammed Kande coming at you with a quick recap on gold. A lot of people, unfortunately, longed gold this week, and I just want to dissect it to help you guys, so that way you're not making that same mistake moving forward. The beautiful thing about trading is that you're going to make mistakes. The reason why making mistakes is so beautiful in trading is because once you make those mistakes, you have the opportunity to learn from those mistakes and never make those mistakes again, or do the best that you can to never make those mistakes again. So with that said, let's jump right into it. A lot of people longed gold, and matter of fact, I had opened up this new thing right here. I was actually breaking down gold with one of my students earlier today, so I have a clean chart that isn't cluttered and stuff like that. So let's go ahead and just jump into just a clean piece of paper, man, and just take a look and see what we can do to make sure that we are a-okay. So first things first, guys, understanding, I don't even know where to start. First, discipline. Discipline is everything. Going long in an uptrend isn't wrong. We are in an uptrend. But what a lot of traders have failed to realize is that within this crazy uptrend, we are in a major pullback. Simple as that. We are in a major pullback. As you guys can see over here, right? We have a strong structural area here. We have a strong structural area here. Price went crazy. Price went crazy. Look at this impulse right here, right? We had a crazy impulse leg right here. And if I pull up my fibs, you guys see where the 61.8 is. This is where we're looking to buy again, possibly between the 61.8 and the 78.6. To be honest with you guys, this is the zone. This is where we're looking to purchase again. You know what I mean? So you guys have to understand that, right? So that's why it is very important to do top-down analysis. When you do top-down analysis, you don't get messed up in the pullbacks. You see, you guys are with the trend. We are in an uptrend. You guys are definitely with the trend, but you missed the pullback. And if you break price down from the monthly to the weekly to the daily, you're going to see that we are in a pullback. So now, as we can see on a monthly, we are in a crazy pullback. Don't be fooled by this small candle. First of all, look at the height of the candle. This candle didn't even engulf the previous candle. See, that's what you see. Paying attention to every single candle is very important. You see, this candle right here is not engulfing the previous candle. So as you guys can see, October's candle did not engulf September's candle. This was just a fake out. First things first. That's why we call them engulfing candles. Just because you have a green candle doesn't mean that it's an engulfing candle. It has to engulf something in order to be an engulfing candle. This, ladies and gentlemen, let's go. This is an engulfing candle. It engulfed what? It's bigger than 1, 2, 3, 4, 5. And you see that this candle right here, this candle is within this candle's body. That is an engulfing candle. This right here, even though it's small, is an engulfing candle because what? It engulfed the previous candle. You see, a candle has to be engulfing. You see, so it's not just, a lot of people look at engulfings and pin bars and dojis and whatever else, and they just say, okay, you know what, this is an engulfing, let me take it. No, just because you have a big bullish candle doesn't mean that it's an engulfing. And if it's a big bullish engulfing, if it's a big bullish candle and it doesn't engulf anything, it means nothing. So pay attention to that, ladies and gentlemen. There are a lot of candles out there that look very good, but they don't engulf anything. So if they don't engulf anything, why are you going long? That's just one thing, just off the bat. Moving forward, when you wanna take, you know, when you wanna place a trade, no matter what time frame you are, and you see a bullish or bearish big candle, make sure it engulfed something. And the more candles the bullish or bearish engulfs, the better off you are, the more confirmation you are. Remember, guys, it's all about confluence. Okay, so if you guys take a look right here, price was stuck over here for quite some time, and then finally we had a break. After this big break, we have not had a retest of this area. So this is all we're looking for. We're just looking for price to retest this area. And if you guys take a look, if you guys take a look, price found its, you know, like when gold was going crazy, you know, a lot of people were still getting messed up trying to short. I remember some people shorted over here. I remember some people tried to short over here. You know what I mean? At 1430 and at 1499, and they kept getting blown up until gold came up into structure. Structure leaves clues. Always, 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 always. So we got up into structure. Structure was tested twice. You see these big wicks right here? This lets you know that we're getting ready to go down. You know what I mean? And there's something called a mean reversion that the market is doing. If you look on a monthly, price is just too far from the EMAs. You know what I mean? This is the only indicators you can see that I use on my charts. Well, when price has to be close to these EMAs. Anytime price goes too far away from the EMAs, it's like an elastic band. It shoots right back. Every time price goes too far from the EMAs, it's like an elastic band. Every time price goes too far, it shoots back. Okay? At the EMAs, the 10 and 20 EMAs are elastic bands. Every time price goes too far away from them, market has to come on back. All right? So now we've identified the trend. We know that we are in an uptrend, right? We know that we are in an uptrend. From the beginning of time, gold has been in an uptrend, right? Right? Pullback, right? And I bet you this is a 61.8 pullback. All right, look at this. On the monthly, you know, we had a pullback, right? Price pushed off, and then guess what? Price came into the 61.8. You know what I mean? Deep into it, and then guess what? We had one tap, right? Look, we had 1, 2, 3, 4 taps of the 61.8, and now market is shooting off. And if the market stair steps, which it often does, you'll probably be looking at the price to come all the way down to the 50. But I highly doubt it. I think that we have enough structural area over here in the 1340 to 1380 area that I think that that's where price is going to be. And once price gets to this area, you know, we'll be good to go. So overall, we know that we are in an uptrend. Overall, we know that this market is going up. Our job is to catch it at the lowest possible price. And gold is a pair that moves, man. Gold has moved over 400 pips this week. You know, this pair does numbers, major numbers. So you want to make sure that you're not caught on the wrong side of that, or you're going to lose over and over and over again. And one thing that I recommend with gold, silver, and these indices like US 30, if you get your ass whooped and you take a loss, walk away. Don't re-enter the market. Don't do it. I'm telling you, it is not worth it at all. Don't freaking do it. Get out of the market. Just take a break. All right. So anyways, so if we see, this is what happened last week. This is what people saw, and this is what got people so excited and aroused about going long. This candle right here. We have a bullish candle, and this candle's close was higher than the previous candle's close. And if I just go to the daily real quick, on top of that, on the daily, not only did you have a bullish candle close, you also had this this bullish pin bar right here. So everybody said, "Oh shoot, now it's time to cook. It's time to get going." But what a lot of people fail to realize is that we are in an asymmetrical triangle first and foremost. If you guys see, this is the low, this is the bottom, right? We keep tapping this bottom, and then we keep getting lower highs, lower high, lower high, lower high. So that lets you know that you're in an asymmetrical triangle. And usually with this formation right here alone, when this formation is created, what happens? Usually price breaks to the downside. Almost 100% of the time, almost 75% of the time, I'm sorry, price breaks to the downside on these patterns right here. You can almost bet on it. And if you use that along with the confluence that, and knowing that we are in a downtrend, you know what I mean, right now on this monthly and weekly pullback, then you know that you're expecting price to come on down. All right. So now let's go back to the weekly. So same thing. We had this first impulse leg. Pull up your fibs, man. Fibonacci is a very good tool to use. Pull up your fibs. Pull up your fibs. Pairs like gold respect and love the 61.8 to 78.6. Take some time. You know, take some time and back test what I just said. Gold absolutely loves the 61.8 and the 78.6. Absolutely loves it. Loves it. I'm telling you, man, I can do this all day long. I can find so many areas where price is just, you know what I mean? Gold just loves the 78.6 and 61.8. I can, look, there's 3 right here. I can keep going over and over again. You know what I mean? And the market repeats itself, man. You know what I mean? So follow that. Use that to your advantage. Anyways, so price reached structure. Right? Price restructure at the top. So now we're just waiting for price to come on back down. Price is going to come on back down to these lows right here. right, to these highs, and this is going to be a new higher low, and we can expect price to continue going. You know what I mean? But guys, we have to be patient, man. We have to be patient. So now, let me show you guys on this pair right here how it looks on a daily. If you guys take a look on a daily, this is a daily support and resistance line. If you guys take a look, this is why I wasn't thinking long at all on gold. First of all, I had this trend line right here that gold has been respecting. 1, 2, you have structure right here. Guys, look at how many rejections we have here. Look at how many rejections we have. 1, 2, 3, 4, 5. 5 times price came up to this area and didn't break it. You know what I mean? So what I was waiting for price to break above this area. Had price broken above this area, I would have waited for a retest and I would have had a TP right here at the high. And that is kind of what I was expecting this week, because I was expecting markets to come up here and then short, creating an M pattern. But price didn't do that. So guess what? I didn't get fucked up. I didn't take the long. I took other trades. You know what I mean? When my job isn't to be right, my job is to make money. So if my job is to be flexible with my analysis and rigid in my rules. My job is not to be right. My job is to make money, and my job is to be flexible with my analysis and rigid in my rules. I blindly follow my rules 100%. However, my analysis, I'm extremely flexible. I'm not always going to be right. And you know what? That's why you set up your analysis and you set up contingency plans. You know what I mean? I told myself that if price, because I saw this happened on Sunday, this little doji or whatever it is on Sunday, and then usually after that, I was like, I wanted to kind of, set up a buy stop and go in, and had I set a buy stop, I would have never been triggered into the trade. But I said, you know what? Let me patiently wait and see what happens. I was expecting price to do this right here, and then I was going to catch a retest that structure, which is a way better odds, and then I would have had a beautiful setup. But that didn't happen. So you know what? Forget it. I didn't lose any money because I'm not busy trying to make sure that my analysis is right. My job is to make sure that I make money, not to be right. Who cares about being right if your account is blown? No one, not even you. So you know what I mean? Let's cut it. So anyway, so we have that. So price never broke the 15-15 area. So that alone right there would have never taken a long. You know what I mean? And if you guys look at the 15-15 area, it is a strong structural area. You know what I mean? Price was rejected here. Price broke. Right here, rejection again. Price broke. Right here, rejection. Right? Price tried again. Tried again. Tried again. Tried again. So you can tell that this area is a very, very strong area. So unless price broke above that area, I would have had no interest. Absolutely zero interest of taking a long setup. So that's 1. 2. Now, once you see that price isn't breaking this area, and then we have a nice little trend line right here that price actually came and broke. Price broke this trend line, on a daily, retested it, and then we had a beautiful short. So this could have been a very good opportunity for you guys, right? So now that price has broken this area, what is next? That's the next question. So now what you do here, and a very good thing to do, is to go, let me take you guys on this chart. Very, very good thing to do is to break it down to the H4. I'm sorry, to the daily still, but I want you guys to take a look at something. So now I want to help you guys capitalize on this long opportunity. On this short opportunity first, and then this long opportunity. So now that market has broken structure, right? Structure. Price always gets back to structure. Now I'm expecting price, let me go down to the H4. Now that price has broken structure, right? Right here, I'm expecting price to come on all the way down here to the next area of structure before we get a pullback. Before we get a pullback down here. And then once we get this pullback, this is where we'll be taking our entries, ladies and gentlemen, for the short. First TP here at structure again. Second TP again at structure over here. And if price breaks this area, it's gonna be stuck within this area, but not far, right? But this is what you want to do. You know what I mean? Plan your trade and trade your plan. You have to plan your trade, man. You have to plan your trade. And once you plan your trade, only trade that plan. Everything that you wrote, guys, let me show you guys, man. Because a lot of people talk about it, but not most people, not everybody does it. But guys, this is 11/3/2019 to 11/8/2019. AUD NZD. My daughter did a little bit of drawing right here. It's all good. AUD USD. Like, I break the markets down. Euro Great British Pound. Euro Jappy. And I spend about an hour to an hour and a half on all of these pairs. Euro USD. My daughter did some work right here. Great British Pound CAD. Great British Pound Jappy. Great British Pound NZD. This was all for this coming week. And I literally take my time and I do this, man. And I take my time. On Sunday, I came into my office on Sunday at 10 a.m. and I literally did not leave my office till like between 5 and 7 p.m. I would take a little 15-20 minute, water breaks, go downstairs, grab some water, and come back. I was locked in my office, man. This is my job. Like, you have to treat trading like it is your multi-million-dollar company. This is your company, and its failure depends on you alone, no one else. So what you put in is what you're going to get out. So you can't be lazy about this shit, ladies and gentlemen. You got to take this shit seriously, man. Don't sugarcoat it. Don't play around with it. Wake up early in the morning like you're supposed to and grind. Take this shit seriously or you will never be fucking successful. Only 10% of all traders make it. So look at all the people that you're trading with. Look at the closest group of people that you trade with. Out of all of you guys, only 10% are going to make it. Always keep that in mind. So you have to be above average. You have to be above great. Trading is one of those skill sets that doesn't come easy, man. You have to earn it, and you earn it the hard way if you're not disciplined. So that's that. Anyway, so on the H4, so price is broken structure again on the H4 like it did in this area right here. So I'm waiting for price to possibly either pull back on the, let me show you guys. Because you see on the H4 we had a break before, but if you look on a daily, it's a little bit different, right? On the daily, we didn't have a clear like price close below this this area right here. You see this right here? And that's one thing you have to pay attention, man. You got to pay attention to everything and take everything into account, right? One, price broke below 1473. It got stuck here last time. That's one. Two, this candle closed, but it closed with a big ass wick. So probably not a good idea to go short right now. You probably want to wait, because if it closed with a big ass wick like that, it's probably letting you know that some buyers got in here, which they did, right? Some buyers got in here and they did. So wait, be patient. Wait for price to pull back. Wait for price is going to do one of two things. Price is going to continue down and then pull back, or price is going to pull back now. You know, we either get this continuation or we get this pullback down here. And then tomorrow you can freaking short this thing down here. Because believe it or not, price is headed there. Price is headed to the 1380 area. I think I've called this freaking months ago. It's headed there. So just make sure you're able to capitalize on it. And then when price gets to 1380, between the 1380 and the 1340 area, make sure you're there to capitalize on it as well, because you're going to make money there as well on the long. So that's what I have, ladies and gentlemen, man. I just wanted to break down, you know what I mean, gold, show you why I didn't enter the trade, even though it was on my hot list. Like I've been keeping track of it, but I didn't enter the trade for the long because I didn't see anything for the long. I did not see anything for the long, man. And then if you guys take a look right here, if you guys take a look on a monthly, man, monthly has been creating lower highs, you know, and then we had a kind of like a double top here type, and then price just dropped. But if you look, price had been steady creating lower highs, man. That's what, you know, lower high, double top, and then a drop. But like, you pay attention to that stuff. You know what I mean? You pay attention to that stuff, man. Like, every candle tells a story. It's good to look at everything, look at the overall picture, but look at every single candle. Price came down. Look, we had up, price came down. We had up, price came down. We had up, right? And if you go to these wicks right here, price came down. We had a double top. And then what did price do after the freaking double top? So if you guys take a look right here, look at this double top right here. We're going to measure the double top from the top to the bottom, and then we're going to extend it. And where does it go into? It goes into our next freaking area of structure. And once price gets to that area, you're going to get another pullback. And one thing, I'm going to share a secret with you guys. When price pulls back on one time frame, you better believe that it is going to pull back on all freaking time frames. All the time. You can almost count on it. It may happen in 1 day, 2 days, 3 days, a month, a year. No retest, no entry. Okay, when price breaks an area, it always comes back to retest that area. And it usually does it on all time frames, depending on how big that area is. If it's a major area like this right here, if you guys take a look, price pulled back to the area on a weekly, but price has not pulled back to this area on a monthly. So price has to pull back to this area on a monthly. If you look at it, price kind of went away and pulled back on it on a daily. So all we're waiting for on the lower time frame, price has pulled back to this area. Now we're just waiting for price to pull back on a monthly. That's it. That's a secret. That's a token. Keep that in your mind. Keep that in mind. I bet you nobody that you're learning from has taught you that. Price pulls back on all time frames, 100% of the time. It may take 1 day. It may take 1 year. Price pulls back on all time frames. If you don't take anything else from this, remember that. So that way you're never going to get on the wrong side of the railroad. You're never going to get on the wrong side of the track and get ran over like you guys did on gold, man. All right, guys, I think I went way too far. Way too long on this, but I hope that this is of value, man. I hope that this helps somebody. If you have any questions, please do not hesitate to put them in the comment section, and I will do the best that I can to answer them for you. And guys, you know, let's close the week strong. You know what I mean? If you've taken more than 5 trades this week and you've lost, sit your ass on the sideline. Don't revenge trade tomorrow. Don't try to get back at the market. It's done. You can never get back at the market. It will keep whooping your ass before you get back at it. Always remember that. So you got your butt beat. You know what? Take a break. Go do something fun tomorrow. And then get back to your analysis on Saturday, Sunday, and then prepare yourself to kill the markets on Monday. That's it. That's it. Godspeed, ladies and gentlemen.